Numbers have just hit. Let's get to them. Rahel Solomon has them for us. Rahel.
Hi, Will. Yeah, so it looks like it was a better than expected quarter. Let's start with revenue. That came in as a huge beat. So that came in at $944 million for the fourth quarter. The expectation had been $815 million. So it doesn't seem like EPS was provided, but it does appear that there was a smaller than expected adjusted EBITDA loss. And the press release just crossing the company saying that its consolidated quarterly revenue grew by 158%. Annual revenue grew by 106%, so that was driven by rapid expansion. The CEO and co-founder Rich Barton also saying that he would characterize 2019 as, quote, tumultuously remarkable. Guys, I'll send it back to you. You can see the stock up about 4.2%.
Rahel, thanks so much for that. Up about 4.4%, as you said. I did actually get a chance to catch up with the CEO moments earlier, and he did say that word exactly. Pretty remarkable in terms of the top-line growth. He said it was pretty stunning. He did say Zillow Homes, Zillow Offers, of course, where they're actually now buying and selling homes specifically, was what drove the big surprise in growth. To that point, that came in at about $603 million in revenue. It was expected about $150 million lower. So that accounted for the big part of the beat. They sold 1,902 homes in Q4. That was up from 1,211 in Q3, well ahead of expectations, both in dollar terms and in numbers of homes, and they do expect that to continue. So bullish on that side of the business. He also said one of the interesting things for investors is a stabilization and acceleration in core advertising business called Premier Agent as well. So the core business also doing well, even if the beat was driven by Zillow Homes. Broader comments, though, on the housing market. Neil, you might be interested in this. He said the market is pretty healthy. Didn't necessarily say it was outright strong, continued to say that prices look good as opposed to outright volumes, and the tight inventory is the key factor that's at play there, as opposed to hugely bullish macro factors. What's your take, Neil?
My take is that for the overall market, housing construction continues to lag orders for most of the major builders, and as a result, construction spending is likely to accelerate this year. You know, the CFO of Caterpillar, in their earnings comments, talked about how construction was going to be slower this year. I think that some of these companies with a global tilt are actually a little bit too cautious on what's happening right now in the U.S., because I do think there is ample scope for both housing and residential and non-residential construction spending to accelerate significantly this year. And that means that companies have been underestimating what's going to happen, and they're going to have to ramp up production going forward.